My 30 plus years as a financial professional, I've learned from day one that the secret to growing money and protecting money is with a good diversified portfolio. And it makes sense. The concept is a simple one. It was developed by Dr. Markowitz and Dr. Sharp in the 1950s. And essentially, his concept was that when you take or reach for more return, you have to take more risk. And that is understandable. Think about if you're 5 years old, you go faster on the bicycle, you're getting higher speeds, but of course, if you fall, you get hurt more. So the relationship between risk and return could be very much linear. But Dr. Markowitz and Dr. Sharp said, if I take two assets that are not 100% correlated and I map them together, I could bend the risk relationship curve. And I could do that because the formula, the Markowitz Sharp formula, is we take the weighted average of the returns, but we take the product of the volatility. And if you take the product of the volatility, for example, 5 times 5 is 25, but 5 times 0.5 is 2.5. So we can reduce the risk exponentially as long as the correlation coefficient is less than 1. That's the concept. But to do this, to get to bend the risk relationship curve, to get more return with less risk or less risk with the same return, we want to be able to map two assets that are not correlated. But what happens is in a very volatile market, what happens in a diversified portfolio is that we get in a situation where all the assets move together. I think today is a good example when you saw everything in the financial markets collapse, whether it was crypto, whether it was Europe, whether it was China, whether it was the US, all crashed. And that's what happens. When markets become very volatile, we lose diversification and we have no protection. And that tends to happen in really bad bear markets like 2008. So the concept is simple, that if we can eliminate this problem with diversification, then we can have a portfolio that really withstands this volatile period. And the way we do that at IPS Strategic Capital is simple. We diversify, but then we hedge. We put a seatbelt around the portfolio. We put a parachute on that plane. So when the markets do crash, I have hedging products. I have things like puts that protect that downside. And this is the truest way to invest. If you're in the stock market today and you're invested and you're not hedging, you're an accident waiting to happen. Literally, you're an accident waiting to happen. You should not be invested unless you're hedged. Period. End of story.